Good morning, good afternoon, good evening, wherever, whenever that you may be listening. This is Yonks, and this is yet another episode of Onchain Builders. And I can't tell you how excited Tyler is to have a conversation with our featured builder here today, Annelise Osborne. And on that note, Tyler, over to you.
Yes, thank you, Jason. So, Annalise, welcome. Thank you so much for agreeing to do this. Annalise is the author of this fabulous book, From Hoodies to Suits. This is not, let me see if I can get this on my camera. From Hoodies to Suits. And we'll also post the link in our live stream. She's also the Chief Business Officer of Cadena.io and has really been a tech and financial expert in this space as the industry changed from kids in hoodies banging on Red Bulls in their basement at 4 in the morning to a mature industry that's attracting the JP Morgans and the Merrill Lynches of the world. So super excited to have you. Thank you so much for joining us today.
I'm so excited to be here. Thank you. And thank you for the very kind words. I appreciate it.
Absolutely. So since I couldn't quite get your book on camera, we'll post the link in there. But from
Heaven,
hoodies, oh, perfect. Okay. Love it. So let's talk about your background and your hero's journey. What was your professional experience that led you to write From Hoodies to Suits?
wow. I never thought that I would be an author, to be honest. It was not on my bucket list necessarily, but
Sure.
I worked in traditional finance for most of my career. In 2016, 17, I got into crypto. It was really more blockchain. It wasn't crypto at the time, but I was asked to join a regulatory task force focusing on ICOs. And that was really 17, 2018. And that was kind of my first journey into technology and shifting from the, traditional world and the more structured corporate world. Um, so fast forward, I did a startup, my own with a partner back in 1819. We had a broker dealer. We launched digital asset securities when they were security tokens at the time, STOs. Then I worked with Arca. Arca is a tokenized has a tokenized treasury. They're a crypto hedge fund. We had a money market fund before Franklin Templeton, Wisdom Tree, BlackRock. And the whole idea of, like, for me, is understanding how this technology can upgrade finance. I don't feel like we're disrupting. I feel like we're adding another level too. We can make things faster, cheaper, more secure.
Sure.
Um, while I was at Arca, we had within the industry, Terra Luna fell apart, which was an algorithmic stablecoin, and then FTX happened. And FTX was, as many of you probably know, Sam Bankman-Fried's company, and there was a lot of fraud there. It was a bad actor situation. It wasn't a bad technology situation. But what I found talking to in the institutional world, I was speaking to a bank who said they had a cease and desist talking about anything crypto or blockchain until the following year. And for me, that was a lack of understanding of education in the space. And so I thought there's really kind of three things holding back institutional adoption. And the first one's education. And that was something I could do something about. And so that I decided I wanted to write a book. And I had it all in my head for the most part, like really talking about what this technology is in a non-textbook way. Like, what are the applications that can be done? Like, it helps. My goal was to help kind of Bob the finance guy, is what I always say, like in risk committee or what have you, understand the benefits of this technology as opposed to being scared and seeing it as a fraudulent activity. Cryptocurrency is built upon blockchain technology. And I think a lot of times people associate Bitcoin with Silk Road way back when there was negative activity,
Sure.
or that was used to pay for illegal substances. But there's less illegal activity in crypto. I think it's less than a fraction of a percent. Whereas if you look at US dollars, like that's generally what's used for money laundering.
Right.
So my goal was to kind of share it out there so people understood it and that understand Bitcoin and blockchain are not the same thing. And what's the difference? And institutions are paying attention. What are they doing? Why are they doing it? And, the world is shifting. We have to look at where, skate to where the puck is going, not where we are today. And I think a lot of this is just this is a basic next steps. Like, look at the floor of the New York Stock Exchange. 20 years ago, it was shoulder to shoulder, and that's where we traded stocks. And look at it today. Now it's for media because everything is electronic. And so this is just a next stage in that kind of electronic trading to move to. tokenization, I think.
Yeah, I agree with you right on. One of the references you made in that book was a pretty famous interview where Jamie Dimon says, "We don't care about Bitcoin, but we care about blockchain." And he was really interested in the rails of it, but not the actual asset itself. How have you seen that changed? And what do you think about people that are finally starting to understand Bitcoin and blockchain are not the same and all of the use cases? And then also, how are you seeing the traditional finance industry adopt what is now considered an alternative asset the same way that gold and futures and everything else that they accept are?
So I would look at crypto as being an alternative asset class to invest in, like you had mentioned, right? So there are different use cases for it, but the idea of Bitcoin and Ethereum and so many, there's thousands out there. I think that people want to have access to alternative investments, and that's what they look a lot of the crypto trading on. If you think about different currencies, for example, there's, foreign currency trading all the time. So I feel like that's one aspect of it. And I feel like a lot of traders today can step right into that because it's different trading strategies for that. However, blockchain on which Bitcoin and these other cryptocurrencies are built, I feel like is a tool, for example, exactly what Jamie Dimon had said. They use it to move money, and it can be faster, cheaper, more secure. So JP Morgan has created their own blockchain. The founders of my company actually had worked on JP Morgan's first blockchain. So it's funny that, we bring them up, but
Sure.
there's a lot of benefits to the financial system. They use it for a lot of repo transactions, which is short-term borrowing and lending of like cash collateral. And they've saved millions and millions of dollars on that internally. And there's ways, why can you do that? It's because you're taking out middlemen, but you're making things faster, cheaper, more secure. Like the idea of you can press a button, but you can also use it for interest rates instead of 24 hours can be down to the minute. So it can be much more specific. And so there's definitely fees saved in that. So I think that's one thing institutions are looking at. The biggest, I think, is payments. Payments, if you look at money, stablecoin, a digital dollar, for example. So right now, I was just looking, Visa has statistics on stablecoin. And the last 30 days, there's been $5 trillion of volume transactions in stablecoin. So this isn't just starting. We're really moving forward. And we're making strides, and it's becoming adopted. It's just becoming adopted slowly, but there will be a definite curve where it picks up much faster. So stablecoin is a way that I can pay you money and you get it today. And you don't have to, now I can pay you Bitcoin, whatever, but the stablecoin is actually at the US, usually at $1. And so if I want to send money to my family in India, for example, I don't have to worry about money transfer fees, and I don't have to worry about different currencies going back and forth, or when are they going to get it? Because they can get it today. So I think there's a lot of access that way. Also, if I went to cash a check, it took 5 days to cash. Transferring money into my Fidelity account to invest, they said 5 to 10 days, right? Then I have to sit there and wait, but this allows you to get the money immediately. So I feel like that float that the banks have for holding on to that money, that's going to shrink. It's going to be much faster and immediate. I know SpaceX, for example, is taking stablecoin because they don't have to worry about the transitioning currencies, right? There's no trade of this currency to US dollars, for example. So I think there's a lot of benefits for that. I think the next one, you're talking about institutional adoption. So first, I would say from a payments perspective. Second, I would say from a funds perspective, like if we look at all these asset managers out there who are creating tokenized funds. So you have BlackRock, you have Hamilton Lane, you have Franklin Templeton, Wisdom Tree. They're tokenizing a fund structure. And so instead of me getting a paper certificate, it's not really paper certificate anymore, but you can get a token that you own a share of the fund. And there's different benefits for that. One of them from the asset manager perspective is that it decreases the fees, that the cost of them creating that fund, and it will allow me to take a smaller minimum investment. So instead of me, from a private equity perspective, requiring a $5 million minimum investment, in this aspect, it's much more streamlined. So I can say, I need $200,000, $250,000, I think is what some of the private equities have done. It might be even lower. But gives opportunities to more people to participate in investing in private markets or private equity. Because if we look today, that if we're looking for people investing, there's fewer public companies than there used to do. So many more things are private. This is allowing institutions to get more of that retail money and allows them to grow from an investment perspective. So that's something as well. Also, tokenized money market funds are big, where instead of me holding $1 million in cash when I need cash to transact, what have you, you can put that into a money market fund that is digital, but it's fully liquid. And so I can earn 5% on my $1 million that I can then, we're getting to the stage where you'll be able to pay with it. Right. So instead of me just holding money in a bank account where I'm not really earning a yield, say, you could actually own a money market fund, which could be 5%, but that all depends on interest rates. So there's different opportunities there. I'm excited about the world of fixed income and debt and bonds, because you can actually, this technology allows for self-executing more or less, right? You can actually have programmable securities in there that actually pay when they're supposed to pay, they report when they report, and all of that data could be reported back to investors faster. So if I am buying, if I have I used to do mortgage-backed securities, right? If I have a mortgage-backed security and all I care about is, are people actually paying? Like, are they paying their debt service? I can see that everyone's up to date. And so I'm not worried. I don't have to wait 60 days to find out somebody didn't pay. So different remittance periods. So there's just a lot of, and that's just one small example. There's so many different examples as well. And as we look, more and more people are getting into the space, and the government is stepping up in the United States, most definitely. I think there's been a lack of institutional adoption. My number two is regulation, right? There has to be clear regulation. A lot of the projects I'm working with right now that are building on our chain from a tokenized perspective are from Europe, because Europe had more clear regulation and guardrails, guidelines as to what are digital assets, how can we work with them. And so the United States now is focused on creating, I was in Washington, D.C. to help talk about the Genius Act and the Clarity Act with different members of Congress. And they're open to learning more. And they're open actually to make the United States a hub for innovation. Whereas in the past, a lot of people have moved out of the United States because they're concerned about different types of legal, the SEC was offering up Wells notices, right? When they, before. And so it's kind of, what is it? Legislating through regulation. Sorry, regulating through legislation. Sorry, that's what I'm trying to say. And so now it's exciting to see, like, there's a lot happening in the United States. There's a lot happening globally. That's the other thing. This industry is global. And so I'm really excited to see kind of where we're going to go. So I got off a little off topic, but so alternative assets, institutions, where I see them going.
I love it. I totally agree with you on Genius and Clarity, and then also Fit 21, which is obviously a little bit older, but that whole suite, it was just really interesting to see the CEOs of Kraken and Coinbase and the Winklevoss twins and all these different people in the White House at the same time and saying, okay, here are the people who are in the room, and they're all in the room at the same time. It's been interesting. So back to the institutions part for a minute. Where do you see this going with pension funds and some of these large college endowments and some of the places that have huge swaths of private equity? It's really illiquid. So you think about like a Harvard or a whatever, $50 billion plus endowment. Most of that's in private equity. It's not liquid. Where do you see crypto impacting some of the huge holders of private equity, and what does that look like moving forward?
Sure. So I would call crypto kind of the investing in cryptocurrencies, right? That's one bucket. But then also the idea of illiquid private assets. Now, just because you're tokenizing it's not going to make it liquid, but it does, because a liquid, you need a buyer and a seller in a market. However, it does give you the opportunities to bring that to somewhere, an exchange where you could actually trade it to find the buyer and the seller. Generally, we're not changing any kind of legal structures. If the legal structure actually allows for trading, it definitely opens up more opportunities for rebalancing. I think it opens up for sure opportunities for Harvard to be able to, like the endowment, for example, to be able to work with more opportunities for rebalancing and liquidity. And then I think it also helps kind of like me, for example, to be able to invest in, because I don't have $5 million to invest in all the different private equity funds. So I do think I do think it can help on both sides, right? You can have a, fully, you can also like through tokenization, whereas the world, we're going to have a lot more in collateralization. So I know that like the endowment can technically borrow against their endowment, but I feel like that is going to be much more commonplace for more people and more companies.
Yeah, I love that. So let's talk about the some of the generational change. One of the things that you talked about in chapter 7 was you highlight how new generations expect change. So we all switched from writing checks to using credit cards to expecting to be able to use a credit card at a vending machine, Venmo, like the payments that we expect and the level of instantaneousness seem to be shifting faster and faster. Where do you see kids today who have always grown up with mobile everything? What are they going to have? What expectations are they going to have around crypto? And where do you see that changing marketplaces responding to accepting crypto, trying to figure it out? What is the mobility of payments look like with some of the little bit more complicated UI of crypto? Not everybody takes it. What does that all look like for you?
So, couple good points you brought up. First, the UI UX, like the user experience. I think that crypto will become much more like a people call it Web 2, right? Like an experience that we're used to. When I open my PayPal app, I can send money to pay, and they won't know that you're using stablecoin or that it's being faster. I think if we look at the generations, look at Gen Z, right? Gen Z gets there was a study done in the UK. 85% of them go to finfluencers before they go to their parents or anyone else for financial advice.
Oh,
That's
interesting.
very different, right? So I feel like everyone's on their phone, they're learning, but also on their phone, which is a supercomputer. It's more than we took to get to the moon.
Yep.
That the expectations of everything being digital are so different than me, for example. So I didn't have a cell phone in high school. So I feel that I had to learn technology more, but these generations, and I have 3 teenage boys, they just see the world very differently. For your question on payments and where the payments go, I think in the short term, you're going to have applications where people are spending more people accept Bitcoin. I think you're going to have more people accepting stablecoin. Obviously, the biggest one right now is USDC, which is Circle. I think that will probably become more commonplace. But as we go forward, the idea of, you know, give it 10 years, why can't I use this, something that's slightly more liquid too, like a tokenized treasury fund? That could be money, right? Why couldn't that be collateral and me use that to pay? Or some other investments? Can I buy that with an Apple stock, for example?
Sure.
So obviously that it has to be a large enough market cap or liquidity to use. But I think the world is shifting. I try different accounts just to have that different experience. And you look at Robinhood, for example, Robinhood, where I think 85% of their users are under the age of 35. I have to look at that statistic again, but it was about 85. It might have been higher. And so it's a younger crowd, but I can go into Robinhood and I can invest in both crypto and stocks and I can get a return on my cash. And so
Sure.
instead of having bank accounts, trading accounts, and a crypto wallet, I can have that all in one place. So if I have cash there and I can pay in cash to buy my Starbucks, can I pay in Bitcoin to buy my Starbucks, and can I pay in my Apple stock to buy Starbucks or whatever of that variation it is? So I do feel like payments will change. If you look at China, they had Alipay and WeChat that were a majority. I feel like 95 for like a huge majority of like nobody carried cash. And so those are both private companies. They were also looking at doing a digital yuan, the CBDC there, and they have implemented that to try to capture that market outside of the private pays. But they're used to not carrying cash. So I feel like there's different ways we can look at it, different examples from obviously different countries, but also, this is where we are today. Where are we going? How do we see that coming through? I also like the idea of, my boys like video games and they love, like, sure, they can invest in a stock, but they can also invest in that game, right? If that game is tokenized or that sort of investment where you can actually stand behind the things that you feel strongly about, I think that's interesting too.
It's pretty crazy. I'm not sure if you have heard that Vitalik was angry at World of Warcraft and then he built Ethereum. So that was just a kind of a fun fact. One of the things that it is pretty shocking how much we're paying for these digital licenses, we're buying power ups, we're buying all of these different things, and you can't sell your character after it's powered up. You can't sell anything that you've accumulated in a game. So it's pretty shocking that we somehow accept that, but we don't think people are going to want to own these different games. So let's shift gears for a little bit. Let's talk about Cadena. So it is the blockchain of business is the tagline. And let's talk about how is it different from other layer one blockchains that are in the market right now?
Sure. Stuart and Will had created back at JP Morgan the first innovation lab there and the first blockchain, which was private. In different iterations, JP Morgan kept going. They actually left early on to create a public chain. And so their vision was that public, like the difference of a public chain and private chain. Private chains are generally controlled and within one ecosystem. And the idea of decentralization is a public chain where there's nodes all around, and Bitcoin and Ethereum, those are all the big public. I equate it to the intranet and the internet. So the intranet is when websites first came out, companies were concerned about security, and we all had an internet. And so the internet was within the company, and it was like a bulletin board where you could post things and like whatever, or where people could chat within the company. But then you take that and look at the internet, right? The internet is broad-based. Look at information. Companies are online and only online. There are companies that are just on the internet. And so I feel like it's an adaptation of recognizing the benefit and the large expanse that we can do going from a private chain to a public chain. So Stuart and Will left and created that. And they also created a public chain, but also the idea, some of the concerns are on the cost of gas, so the cost of doing transactions, and also the idea of scalability. How can we actually, it slows down if too many transactions are going through at one time. So they created Chainweb, which is a web of chains. So the Cadena blockchain is not one main chain, it's multiple chains. And the idea is things can walk back and forth between chains, but you can also, it's not going to have a throughput problem to slow down or have gas spikes, is the thought. We're actually now adding on EVM chains as well, which is exciting. We have our own native smart contract language pack that was created for financial settlement. The idea of Cadena was really created kind of for institutional markets. And we've been live for over 5 years. Part of that, it shows like we've been around. What we weren't doing was integrating with the market as much. We were really more focused on building cool, innovative technology, kind of more to a smaller ecosystem. Now what we're doing is recognizing, let's bring that out. Let's roll it out. Let's have much more built on us. Let's have more products, more opportunities for the different community members of kind of what they can do and how they can participate in our ecosystem. And what does that mean? And so we have, I look at us as having 3 clients. Right. And I look at them as clients because I think it's important to think of them that way. I've been at Cadena for about a year now, which is super, super exciting. Seeing where we're going, it takes a while to develop tech. So not everything has rolled out as quickly as we'd hope, but we are super excited. We have our first bridge to Ethereum. We have our first liquidity pools, but our first client, our 3 clients are 1, community members, 2, developers, and then 3, I call them issuers, but it's really companies building on our chain. And so I feel like each one is a little bit different. But within our kind of how is I'm building out the business, 1, we have the crypto ecosystem. We absolutely need to have opportunities within the crypto ecosystem, being obviously centralized exchanges, DEXs, lending protocols, stablecoin, games, like different gamification options, but things to actually enjoy like increased liquidity, but also we have DPRIN project that's very active, like different things that we can use in our ecosystem that are crypto and native crypto. We also have the world of, I'm a big believer in how traditional finance will upgrade, right? With the whole tokenization of real world assets, different ways to call the same thing, but really what blockchain can do for more efficient systems. We have invoice factoring on. We have so many different things that actually benefit the end users that we're creating from a tokenized perspective. We have equities that are about to come on chain. We have done a grant for as well for a fund out of the UK that working with the FCA, which is the regulators there. But building out the tokenized ecosystem, we have custodian coming on, we have data that we're providing that we didn't before to potential investors to say this is how active we are, come join our ecosystem. So we're bringing that in because I'm a huge believer TradFi and DeFi will merge. If you think about what DeFi is, like lending, it's really private credit, right? It's very similar. We're just creating more efficient lines. And so I feel like we're tying those together, and that's really the goal. We're also creating products, and that's super important too, because we have to have that good user experience. We have to have easy ways to build on us, and those tools and toolkits that it's easy to put together. Obviously, our EVM chains are Solidity based, so that will be a little bit easier because there's so many Solidity developers out there now that it's easier, a quicker go to market. Pact is, there are Pact developers out there. We're teaching more workshops. We're starting to expand into different markets. So we've really been focused kind of in the US before. Now we're really focused Europe for lots of tokenization. We have some projects that we're seeing out of the Middle East. We have projects where we'll be in Singapore shortly for Token 2049 because we have a whole bunch of partners there. We are doing developer projects. We just did a hackathon and a workshop in Vietnam. We're doing one in India hackathon. We're going to do one at DevConnect down in South America. So we're finding different pockets, but really what I think we're doing is pulling together DeFi and TradFi, and it's going to be really fun. I think the different ideas of collateralization and lending and what we can do, speeding things up, making lending cheaper. I wanted to borrow to redo my deck just to show traditional people as in less crypto oriented. This is like kind of the next step of finance accelerating, but upgrading, right? There's different ways we can use this as normal people. We don't have to be kind of the hoodies or the crypto crowd.
Yeah, and it's really interesting that you brought that up because one of the things I think has been a pain point for a lot of traditional finance people is this whole idea of peer-to-peer with no trusted third-party intermediary. And I think a lot of people like the idea of peer-to-peer, but they also really like the idea of some kind of a trusted intermediary. Like, is there some legit project on the other side of my loan or I think I was um on a bond desk in 2008 when the whole world was on fire, and I just remember people, one of the things we were really proud of as a company at the time was our money market fund didn't break a buck. And I never thought I would have to explain why my competitors' money markets had negative rates. That this wasn't supposed to happen. So it's all pretty interesting. So let's talk about how do you merge the speed of crypto with the very slow speed of traditional finance? And I'm not sure if you're working with any government entities yet, but they're not known for their zippiness either and trying to adopt new technology. What does Cadena look like in terms of the speed and the adoption and the speed that needs to happen and what doesn't always happen in traditional finance and other entities?
Sure. I'll start by saying finance is regulated to protect investors and create efficient markets. So it's slow in that sense because I think that has over time, finance is it's been around since the very early days of civilization in different aspects. So I think part of it is people understanding the tech and what it delivers. I think there's got to be reasons to make money or save money from a business perspective if people are going to use it. And so part of it is understanding what that means. Part of it is a lot of the institutions have very old systems. They're built upon very old systems. So how do you upgrade that technology? That's very slow. How can you find ways to kind of plug in? So first, I think there needs to be the business case and the understanding. And then comes in kind of like how do we plug that into our system so that user experience. Now, what I think we're seeing a lot of already in the crypto ecosystem is mergers and acquisitions. So what I think is going to happen is that we're going to have a lot of these fintech companies, crypto companies, what have you, and I think they're going to be purchased and integrated into larger organizations, so institutions. I think it's hard to innovate if you are inside of a large institution just because the checks and balances, things are slow, takes a while to, you can't move fast and break things, for example, right? There's regulation important, but not that I'm saying that crypto startups are doing that necessarily from a regulated perspective, but I do think it's faster to innovate in a startup. And so I do think we're going to see that. I think that's going to be a trend. I do think the regulation that's coming out in the United States, I think that's going to be very helpful for institutions because they can work within guidelines. But I do think that the adoption comes when, oh my gosh, look how much money we're saving. There's $5 trillion that transacted in the last 30 days on stablecoin, right? I don't know. I think institutions have to step up. I don't think that they're going away necessarily. I think that they have to keep up with the times though, as in they can't be like a Kodak or an AOL, right? Where you don't actually merge and move forward, or a Blockbuster. But I do think there's a need for them. So it's how do they work in today's environment? How do they kind of think about how can we integrate like digital assets? And how can we make it work for us? I look at, for example, with all the stable coins, exactly if I'm transferring money to you, there's no intermediary. What happens versus I use my credit card all the time. And if someone doesn't deliver what they said they deliver, I can dispute the charge.
Right.
I think if once we identify problems, we'll find ways to fix them. So I would think that we could still use the benefits of stablecoin and find ways to interact with that as well. MasterCard and Visa are both looking into blockchain. They're doing the world is figuring out, like the financial world are figuring out how can we work in this space, as opposed to, I think, 10 years ago, 5 years ago, people didn't want to talk about it. Right. It doesn't matter. It's not for us. It's not going to gain traction, but it is gaining traction, and it does bring a benefit. And it's just recognizing kind of what that benefit and how do they step into it? Because if you even think about, all the banks want to have tokenization platforms, because if you're thinking about doing an IPO, for example, or what if we could there's very expensive, it has to be a certain level of company. Well, if we can tokenize this and in essence do an IPO, we can use you can use smaller companies. So we can get fees from more people because there's more smaller companies out there that we could actually sell shares for. So, or even, any type of debt offering, equity offering, any of this. So, and the world is more private than it was public. There's fewer public companies, like we said. So how can the investment banks figure out? So they're definitely looking into it as well. So I feel that, yes, there are ways to cut out intermediaries, but I don't think all intermediaries will be cut out.
Yeah, I agree with that. I think one of the challenges is there's so much unknowns and everything's irreversible. So you send Bitcoin to an ETH wallet, it's gone forever. It's not like I wired it to your account, but I swept the digits and then the bank rejected it, comes back. So even some of the irreversible transactions are still not totally irreversible, just depending. So,
They're not
um,
irreversible, but I will say they're trackable, right? A lot of
right,
times they're text, they leave a fingerprint. It's not
true.
that you can turn them around, but you can see where things went. There's a great book called Tracers in the Dark that I read that was interesting, talking about that, how they tracked down a whole bunch of the Silk Road money.
Yeah, well, it's been really interesting. One of the things that did you ever get in the TV show Billions?
Yeah.
Yeah, so it's just kind of funny. I think that show is maybe 5 years old or something, and they're talking about these completely untraceable millions and billions in crypto, and it's so funny that that segment of that show did not age well, and it's just been really interesting when they're like, it's fine that we do this because I'll just give it to you on a flash drive and nobody will ever know about it, and it's all fine." And so anyway, it's just kind of funny. Um, so, where do you think the mass adoption comes from? Is it going to be when the institutions like the bank start offering it, or is it going to be I'm your friend that hasn't been stop talking about you at Bitcoin for 5 years and you're finally ready to listen? Is it peer to peer? Is it both? Is it government saying, "Hey, we're going to give every baby $1,000. Maybe now it's $1,000 in stable coins instead of money." Like, what does that look like?
So I think blockchain will be rails of the system. Like part of that is how is it the rails, and we don't need to talk about blockchain. It's just there, and things are faster, cheaper, and more secure.
Okay.
I do think that from a Bitcoin investing perspective, not everybody people are looking at putting that in their portfolio. Some of the financial advisors are starting to recommend that to have a different alternative asset class. I actually look at what DC is buying because you can actually track what all the politicians are buying. What's interesting is one of the top things they're buying is the Bitcoin ETF.
Right.
But things like the ETF, you're paying a fee to not have a wallet and buy it in a traditional structure, but it opens it up to a whole bunch of people that are concerned of like a wallet is really just like an account, but it's different.
Right.
And so anything different, even though it's we're using different words for almost the same thing. So I do think that there's going to be a lot of opportunities in that sense because it's becoming more mainstream and it's accessible, and it's the user experience is very similar to what they're used to. So I do think you're going to have companies that are actually creating that user experience that they don't need to know it's blockchain. Like, you don't need to know Visa and MasterCard are using blockchain. You just need to have a better experience than you did before. And so I feel like that is really where it picks up, where it's not necessarily saying, oh, I have to get a stable coin. What is that? You can just, I can use my Circle currency, right? Or whatever it is that you can use as long as there's an application. So I think that we'll probably talk about crypto because that's kind of Bitcoin, Ethereum, what have you, but it's alternative asset class. It's just classified as that. And then the rails will run on blockchain and we won't mention it. It's just it's a more efficient either fund with lower fees, or it is a bond that is lower fee bond as well because it's automatically paid and it has better access to information.
Yeah, it's the bond industry, I think, is so interesting. I don't think people realize how big of a market that is. And life insurance companies and mortgages and all of these different debt instruments that run on fixed income and then the derivatives market. I don't think people realize that the derivatives are multiple times bigger than the stock and bond market because you can bet an unlimited amount in any direction on about anything, and you don't have to have the underlying stock to go with it. So,
Absolutely. But also the more complicated the trade, the more beneficial the technology is. You
right,
can track it. So
absolutely.
I totally agree with you.
So, let's go back to the book for a minute. So, who did you hope would read it? Who actually did read it? And what positive or questioning feedback have you gotten about it? What was the response versus what you maybe expected it to be?
So I am very flattered with the response, because when you write a book, it's all in your head and you're putting it down on paper, right? And I'm reading it and I had an editor that was super helpful. But you don't know what other people will think about it. And I backed the first 10 chapters of the book are all backed up with fact, right? They're quotes, what have you. It pulls together a narrative. And then the last one is all my thoughts, right? Like, where do I think the world is going? And so I thought that's where I thought I would get a lot of pushback. So I sent it to my biggest critic, who I thought would be my biggest critics. And I got great reviews back from them. And so I was so lucky. I was very flattered. And that's why I had a lot of people read it and comment. And so those are like, I have inside the book a number of pages of people's responses. But I was really taken back. The fact that it has resonated with so many people, the fact that people have come up to me from other countries saying, oh my God, this was so great. My neighbors who are not crypto at all were down in Brazil, and crypto came up at a conversation, and they recommended to my neighbors to read the book, which is really funny because then they think that I'm some like famous person and I'm really not. But like that to me, that it made a difference. I was aiming at Bob, the finance guy, as I say, but I had one of the bank's tech group got it and bought it for like their interns because they loved it because it explained the finance side of what they're doing in tech. And so it was very applicable for them to get a better picture. One of the CEOs of one of the layer ones gave it to his wife. And he said, this is the first time my wife actually understands what I do. And so a lot of that feedback, that's what warms my heart, that it's so interesting. FIT, the Fashion Institute of Technology in New York, uses it as a required reading for their innovation class. And that blew my mind because I don't think about fashion and brands when I think about blockchain, because I usually think about finance just because that's what I know. But there's a lot of most of the big brands are using NFTs for counterfeit and piracy. And so it was super interesting going to speak to them. I had no idea what I was going to wear, but I survived.
Amazing. Did you have to walk down the runway to the podium, or how'd that work?
It was so funny. I had such anxiety about going to teach in front of all these fashion people because I don't perceive myself as fashionable. But then I got over it because I was like, if I think this way, I'm never going to be able to do it. So it was super interesting. They had a lot of questions. A lot of their questions were about funding as well because they're doing startups. And we have a lot of that VC world. I have a lot of experience in different sides of that.
Sure. So last question before we wrap this up, where are we, the industry, going in 2030? Where if you're a big brokerage firm or an issuer, or you are um, a big blockchain, a protocol, where are we going in 2030?
I think I think tokenized funds, I think tokenized debt, I think more being built on blockchain is inevitable. I think there will also be more opportunities by 2030 about how you can collateralize that, like how we can use lending for real world assets, right? I feel like there's a lot of different opportunities that will present themselves that we're starting to talk about it. We've been talking about it for a while. Um, Secondary market trading, I think, is going to become more commonplace as well, about creating markets in the tokenized world. I think we're not going to realize a lot of what's built is on blockchain. I think we're by then there'll be a lot of projects and a lot of companies will actually have moved out of their pilot phases and actually into program phases for that. I think that crypto will be more of an alternative asset class. I think there will be some, if you look right now, the top data companies in the world, the top 10 include Amazon and Google. Neither of them's main business is data. So that to me is interesting because it shows that you're going to have companies that are in our space that actually are larger companies that are taking on more. So we've had a few IPOs recently. I think we'll kind of continue to see that. I think there'll be more emerging in the space. But I do think it's not going to be like a side project where crypto blockchain. I think it's going to be much more mainstream.
Awesome. Okay, Annelise Osborne, author of From Hoodies to Suits and the Chief Business Officer of Cadena.io. Thank you so much for making some time for this fascinating interview. Loved your insights. If you're watching, please subscribe to us on whatever channel you're watching on, and stay tuned for more great conversations with the on-chain builders, the most interesting people in blockchain and the industry. Thanks again.
So fun, Tyler. Thank you for
Yes.
having me.
Yes. Thank you so much, Annalise.